Joining us right now, Jeremy Siegel, professor of finance at the University of Pennsylvania. Jeremy, things had been moving along in a lot of the right directions. Equities, of course, had been on quite a streak. Things are now turning around in large part on the back of this inflation data and the expectations for the Fed. I'm so curious what your reaction to that inflation data was yesterday and how you think Jay Powell is going to handle it.
Yeah, I think as Mike said in the 6 a.m. hour, if the data came in yesterday just 2 or 3 hundredths of 1% lower, it would have rounded exactly to the expectations of the market. It sort of reminded me of what happened after the last FOMC meeting. If one of the 19 FOMC members had raised by 1 tick their December estimate, we would have had a median of only 2 increases instead of 3. Probably the market would have collapsed, but because they did, it said 3 and the market soared. It's so hypersensitive, overly sensitive to these numbers. Let me just read 2 sentences from the BLS report that came out yesterday. After reporting, they said the shelter index increased 5.7% over the last year, accounting for over 60% of the total 12-month increase. Other indexes with notable increases include, and we've talked about this, motor vehicle insurance up 22.2%. Well, the shelter and motor vehicle insurance are the 2 most backward-looking of all the components of the consumer price index. If you take, for instance, on-the-ground indexes such as the Zillow index, or particularly the apartment list index, which has an excellent index of monthly rentals, it's actually been 0 year over year. In fact, it's been 0 year over year for almost 2 years. We've talked a lot about the way the BLS does it. It's an 18-month moving average that way lags the market. You take auto insurance. It's verified that auto insurance premiums follow 12 to 15 months after the increases in used and new car prices. Well, they all rose during the pandemic.
In other words, are you suggesting that we are overstating or overthinking maybe?
Yeah, you're overstating.
The inflationary pressure on the economy?
Yeah, I think they're overstating and overthinking. Now, all that said, commodity prices have stopped going down. There's no question that we're seeing some rise in commodity prices that we hadn't seen for 2 years. And that's something to look at. And by the way, the money supply, which I looked at, is finally beginning to rise again after, being really flat for so long. So that, these things bear watching. But hey, I just think that there was an overreaction to what we actually got. And I really think that inflation is still going down to the Fed target, and that we might see, I said 2 rate cuts. I never thought 3. 2 rate cuts by the end of the year. But more important than that, and if you were to give me the choice, rate cuts or strong economy, it's no contest. Strong economy is better for the stock market.